Yeah. So we have the manual addition. So where we will give the asset number and the cost and all those mandatory information. And the other way of doing it is that using AFBDA. Okay. And we have something called FBTA. And then we have passing the entries through the AP module. Okay. So what we will do is that we will create the invoice and we will transfer those invoices to the fixed asset module. Okay, so these are the multiple options that we have to add an asset. So what do we consider as an asset is that basically whatever the component that has a cost to it and which is owned by the company or the client where we are trying to implement, so that you consider as an asset. Okay, so there are multiple ways of adding the asset. So you can do through the manual addition, or you can do through AFPDA or FPDA and AP module. So why do we use these two templates? So let's say there is a business case where we will have to add the assets. Maybe in a day we will get 50 to 60 assets in a rare case. So for those cases, what you can do is that you can use the AFBDA. So why do we use FBDA? So FBDA will be used mostly for in terms of data migration. So where we will have at least 80,000 to 1 lakh of assets. So you cannot add assets for the manual addition or AFPDA. So AFPDA will support till 50,000. So when it crosses to the 50,000, it will cause some performance issues, like the file will crash. So for those purposes, what we have done is that we have an option called FBDA. So using this option, we can load the assets. And the final option that we have is that through the AP module. So what is that through AP module is that, so basically we have an invoice. So either it could be PO matched invoice or non-PO invoice. So let's take non-PO invoice. So in this case, so what will happen is that, so we have an invoice that is with the asset clearing. So there are three validations here. So the first thing is it should be asset clearing. And the second thing is it should be tracked as an asset. And the final thing, it should be the GL date and the mass addition process that we are following. So this should fall in the same page. Okay. So these are the process that we will have. Maybe when we see in the system, so we will understand it clearly. So for now, just take this part that this is an like what do you call it? The high level understanding on how to do the asset and all this. And then we have the depreciation. So what is depreciation? So what we are trying to achieve is that, so we have an asset added in the system. So if I have added an asset, which means if I bought, let's take an laptop. So laptop I have purchased for maybe 50,000 rupees. If I sell the same laptop, maybe after 5 years or 10 years, I cannot sell at the same price. I should sell at the market price, which should be at least for 10,000 or some lesser price what I have procured. So here what we will do is that we will depreciate this particular asset called laptop. So it could be 5% or 10% or based on the market rate, we can depreciate the asset. So every period when we are depreciating the asset, basically the value of the asset will get decreased or it will be par with the market value. Okay. So when we add an asset, so mandatorily we will run the depreciation. So there are two options here. So either we can run only the depreciation and check the value, or we can run the depreciation and close the period. Okay. Any doubt?
No.
Okay. And we have adjustments. Okay. So what is adjustment? So basically, why do we need an adjustment? So there are multiple ways of doing adjustment. So I can say the cost adjustment, or we can say unit adjustment. Okay. So what is cost adjustment and what is unit adjustment? So let's say the asset cost is 10,000 rupees. and I don't want to have this asset in the same cost. So what I will do is that I will reduce the cost from 10,000 to 8,000. So even though we are changing the current cost of the asset before calculating the depreciation, system will consider this as an adjustment. But whereas the original cost will be still 10,000, but still we will be able to make the adjustment and the current cost will change from 10,000 to 8,000. Okay, this is one adjustment. And another adjustment is that we can reduce the quantity or the unit. So why do we do this particular option is that let's say we have received 10 items, but we have updated in the system that 11 items has been received. So in this case, what we will have to do is that we will have to reduce the quantity. This is I'm just giving a generic example, but business case differs from cases, I mean situation to situation. So in this case, what we will do is that we will reduce one quantity, which means we are retiring one quantity. But whereas instead of doing the normal retirement, what we will do is that we will do the unit adjustment. So for the sake of what do you call the exact cost of the value, so if we wanted to do, so basically we will do the unit adjustment. Okay. And then we have the transfer of asset. So why do we use the transfer of asset, or what exactly is the transfer of asset? So transfer of asset is nothing but transferring an asset from one location to another location. Okay. Let's say I have an asset. So basically how we will manage this asset or maintain this asset is that I will have an employee A. Okay. I will have employee B. And here if you see, employee B will be working under a particular location called building ABC and floor maybe one. And this particular employee B, so he might be working under the same building, that is building ABC, but he's working under the floor two, second floor. Okay. So this particular asset A is maintained by employee. So this is the original assignment that we have given. So in this case, let's say we are shifting the asset from the location from floor 1 to floor 2. Let's say there is a damage in one floor and we have additional items in with us. So what we will do is that we will transfer the asset from one location to another location. So we cannot maintain same employee provided he is working under both the floors or he is kind of a manager. But for the usual case, what will happen is that it will be employee to employee transfer or the location transfer. Either way, we can do it. Okay. So for this purpose, we have the transfer assets. Okay. And apart from that, we have the retirement. Okay. So let's say the asset that we purchased maybe on the 1st of January, and we have utilized it till November 7th today. Till today, we have utilized this asset. And we understand that maybe today, if I return this particular asset, maybe I will not have any cost or profit in my hand, or I can just give it to scrap for any profit, maybe a smaller level of profit. So for those cases, I can retain this particular asset. So here we have two things to discuss. So when we say retirement, so we have something called prorate convention. So what is prorate convention? So prorate convention is something that it will define my depreciation part when I'm retiring an asset. So let's say, so there are basically uh, three types. So one is current, and another one is following, another one is mid. Okay. So what each one of will do is that, so if I say current month, so which means system will consider or system will calculate depreciation for the month when I have added the asset, and system will calculate the depreciation or it will avoid depreciating for the last year when I'm retiring this particular asset. Okay, so this is what we call current pro rate convention. And we have something called following. So following is nothing but the first month of the period will not be considered for the depreciation when I add the asset. But whereas when I try to retire this particular asset, system will consider entire 1 month for the depreciation and system will retire this asset. Okay, and we have something called mid month. So mid month is nothing but it will take half depreciation when I'm adding the asset, and it will consider half depreciation when I'm retiring this asset. Okay, so this will be depends on the pro rate convention that we define it here. So this will become a mandatory configuration for us to do the retirements. Okay, any doubt? Okay, so we'll move on. Okay, so we have seen the transfers, we have seen the retirement, and we have seen the adjustment. So let's take a scenario where we have retired an asset by mistake, but we should have retired an asset A. So instead, we have retired the asset B. So what can be done for this kind of scenarios? So for this, we have a functionality called reinstatement. So what this will do is that this will basically reverses the particular retirement that we did, or it will reinstate the asset. Okay, so which means the retirement that we did will be reversed. Okay, so we will see each one of it, and at high level. So these are the things that we have, and apart from the closure of the periods. So if you have noticed for the other periods, so we can open. So there are two things. So one is hard close and the other one is so soft close and hard close. So what is soft close and what is hard close? So soft close is something that we haven't closed the periods permanently, so we can reopen basically. So this we call as an soft close. So what is hard close? So hard close is something that we have consolidated our balance sheet and we have reconciled and we have done all the auditing and all those things, and we are closing our periods, which means we will close this period permanently. That we call hard close. So you can consider fixed asset module as an hard closure, because what will happen is that once we close this period, we cannot reopen the period. So whatever depreciation that we have done, so that will be part of the particular month. And if you wanted to maybe run the depreciation, reopen the period and run the depreciation or the cost adjustment, so that is not possible. So we cannot do those manual additions after reopening the period. So all we can do is that we can do it in the next period. Our only solution is to do it at the backend, which is not suggested by Oracle as well. Okay. So these are the things that we have it in asset. So you have any questions? Anything specific to fixed asset? If not, we can move to application. Okay, I'll move to application. Okay, I believe you could have seen the fusion on the earlier classes. Maybe someone could have covered the other parts of it. So if you see, so this will be our landing page in the Fusion application, and this will be our fixed asset type. So here we will have the two types. One is asset, and the other one is inquiry. So inquiry is basically for the verification or It is kind of an entry where after data entry is done, so we can verify the balances or the depreciation run or the current cost, whatever the details we wanted to get, we can get from this particular page. And asset is something that we will basically do all kind of transactions here. So if you see here, we will have the add asset, asset throw spreadsheet, and we will have transfer assets, and we will have retire, reinstatement, and all those process. Okay. So apart from that, we have five tiles. So one is addition. So why do we have this particular tiles is that this is to state to an asset accountant that this particular tile mentions that this is an incomplete transaction imported or created inside this Fusion application, and we wanted to take an immediate action on this particular transaction. So if you see here, so we will have only the incomplete transaction. You will not be able to see other closed transaction. So closed transaction, anyway, we can see it here in the inquiry. Okay, in the inquire asset we can see all those details, but apart from that immediate actions will be shown here. Okay. And yeah, maybe other parts we will see after we complete the configuration. So in Fusion, basically, if you see, we have something called setup and maintenance. So whatever the configuration that you do, so this will be done only inside this particular setup and maintenance. And here we have two things. So either we can select our own project, so that is from manage implementation project, or we can select our product, that is financial. Our product is financial or the offering. So from here, if you see, so this is kind of a shortcut navigation. So the the mandatory information will be displayed here. So if the project is allocated on your name, so what you can do is that simply you can click here and you can do the mandatory configuration here. Or otherwise, if I wanted to see maybe the specific configuration which is not available here, so I can click manage implementation project, and from here I'll take my project. Okay. Yeah. So the prerequisite for this particular asset module configuration would be the general legend module. So I should have completed my GL configuration. So I have already completed it. So I'll directly go to the fixed asset configuration. So here, if you see, we have something called system control. So inside system control, we have three flex fields. So that is category, location, and asset key flex field. So category is something that how do we want to categorize our asset? Let's say we have an chair or furniture or maybe laptop. So how do we want to categorize this? So we have two things here. So one is major and the other one is minor. So what is major and what is minor? So if you take furniture, so you can categorize at a high level as an furniture as a major asset. Inside this furniture asset, I can have table, chair, and office equipment and anything that comes under the furniture. I can categorize this as a minor. So this will form a big tree where I have one furniture as a major, and below that I will have the multiple child assets categories like chair, table, and the other things. Okay, so this is what we have in the category flex field, and then we have the location flex field. So location is to identify that where exactly this particular asset is lying. Okay, so that is the basic purpose of the location. So here we have as a default, we have country, state, location, city, and building. So these are the structure, I mean, the segment that we have used. So under this segment, we will add few values and we can have it under our configuration and asset key flex field. So this is kind of an unique value that we will attach it to identify our assets. Okay, so these are the flex field structures that we will use. So if you see here, so we will not be able to what do you call edit this particular configuration. Because this is one-time configuration. Even if we create a new flex field structure, we will not be able to attach it here because this is kind of an one-time configuration. So in Fusion, there are two things that is one-time. So enterprise once you create, you cannot have it more than one. Similarly, here if you see this flex field structures, once you have created it, you cannot have it more than one. Okay. Yeah, so this is all about the flex field structure. And enterprise name, if you want to change it, maybe you can change it. But enterprise as a whole, if you see, it will be always one in Fusion. That is the difference between EBS and Fusion. So in EBS, you can have multiple business unit, but here the enterprises should be always same. Okay. And we have the asset numbering. So I have just mentioned here as 1 lakh. So the asset number will start from 1 lakh and it will end with 1 lakh 12,000. Okay. So these are the basic configuration that I have given for the system control. Any doubt?
What is last asset number used?
Last asset number used is nothing but I can say that this will be my beginning asset number and this will be my ending asset number.
Okay,
So
okay,
after that, I will not be able to use the asset numberings.
okay,
So this
okay,
is not a usual practice. Usually we will have a lengthy one. Since if you see this, this is an vision environment. So anyone can just update it. So since it is used only for the testing purpose, so we are not going to use more than 12,000 records, is the understanding. In real time, we will have more.
okay, okay.
Yeah. Yeah. Any other doubt?
No, sir.
Okay. Fine. And I'll just show you the values, like how do we add the values in the flex field. So the flex fields are same. So inside this particular flex field, basically we will add a few values inside it. So basically here we can see all the list of values that is been added, and if I want to add a new value, so maybe I can just click add and I can add the values. Okay. So these are just values for each segment. So if you see building is one segment, city is one segment, and the combination of this particular structure will be created as one location for tracking the asset. Okay, so we have all the buildings and the other details. So maybe if we need, we can add those values at the later point of time when we are doing the transaction. Okay, so we are seeing the value set and the flex field and the system control, and the next configuration would be on the fiscal year. So fiscal year basically defines that how do we want to maintain our calendar. Okay, so in this case, I have given only for 1 year. So usually it will be at least for 10, 20 years based on the product that we are going to use, I mean the life of the product. So here in this case, I have taken only for the 1 year, that is 2020. So my fiscal year starts on 1st January. So I haven't mentioned on April since my ledger is based on US. Okay, ledger and the legal entity. So I have taken this as an 1st January, and my end fiscal year would be 31st December, and and my mid year would be 1st of June. Okay. So in calendar, in terms of fixed asset module, we have three configuration. So one is fiscal year, and then we have asset calendar, and then we have the prorate convention. So I'll just take the asset calendar. So asset calendar is based on the calendar that we have created for the fiscal year. So if you see here, so I have given the calendar name, that is Tata calendar, and I have attached the fiscal calendar that we created in the earlier setup. Okay, and I have mentioned the periods. So here we have two things. So okay, maybe we will discuss this later. I'll just tell you. So there are multiple ways of calculating the depreciation. So what we are trying to achieve it here is that we have 12 calendar, which means we have January to December. So we are calculating depreciation for a month. Also, there are another cases of calculating depreciation for every day. So that is also possible. So for those cases, what you will have to do is that you will have to define the depreciation period for each day. So that system will calculate the depreciation for each day. Okay, so we will just give 12, and periods suffix I have given as fiscal, so that my year will be followed up. So that is December 20 or November 20. Okay, so these are the configurations that we have for the depreciation calendar. And then we have something called prorate convention. So this is what we were seeing, that we have something called what do you call, the current and following, and this one. So here if you see, I have used mid-month prorate convention, which means what system will do is that, so basically this prorate convention is to tell to the system that this particular asset added in this period will be deducted at uh, for the complete year, or it will be calculated only at the retirement, or it will be calculated as an half for the addition and half for the retirement. Retirement. Okay. So this is what we are trying to achieve it here. So in this case, what I have done is that I have taken the mid month. If it is on the current month, what we will do is that instead of saying this is on 15th of December, we will say this is on 1st of December, which means what system will do is that system will take for the addition entire month, and for the retirement system will not calculate the depreciation. Okay. Similarly, we have following. Following is nothing but it will calculate for the last one. So for those cases, we will say the other dates, like the end of the period. So I have taken mid-month. So let's see how system calculates the depreciation for these cases. And we have something called depreciate when placed in service. Okay. So unless we enable this checkboard, so system will not calculate depreciation for the calendar as a whole. Anyway, we have asset based or depreciate this thing, but still this setup is mandatory. You will have to enable it for the depreciation based on the date placed in service. So date placed in service is nothing but when actually I bought this asset and when I started to use this particular asset. Okay. Any doubt?
No.
Yeah. And another last one thing that we have is that reference data set. If you see here, we have something called TS-RTS01. So what is reference data set? So this reference data set will allow us to have what do you call one layer of security in terms of accessing the data or in terms of enclosing to the financial records. So we can say this is kind of an one layer security. So what it will do is that it will be attached to the business unit or it will be attached to the asset book. Since we are seeing the fixed asset module, so we will cover only the asset part of it. So here, if you see, if I have a pro rate convention of Tata Pro C, so which means this reference data set will be utilized here. So again, this will be attached in the asset book. So this is how we are protecting our this thing. But whereas if you see it in EBS or the other things, we don't have this layer of security. Okay. So that's it. Here we have. Okay. Then we have something called depreciation method. So what is depreciation method? So basically depreciation method will define that how I wanted to calculate my depreciation. For example, I have a straight line method, which means I will calculate 10% for all the 12 periods. So this is not a challengeable task for me since I'll just say 10% and system is going to calculate maybe the asset cost is 10,000. So if I say 10%, system is going to calculate maybe 1,000 for every month. So similarly, system will start calculating until the entire asset goes to zero. System will calculate the cost and it will say that after this particular point, system will say the depreciation is zero since there is no cost to be detected. Okay. So similarly, we have the other methods of calculating the depreciation. So let's say written down value method. So for India cases, if you see the compliance part, it is mandatory to have a written down value method. So what is written down value method is that we have something called the depreciation on a depreciation or the latest cost. So how do we define written down value method? So if you see here, so I'll just say name and I'll just give the depreciation, the depreciation method description and I will attach the reference data set that I used earlier, that is TS. And here you will have multiple options. If you see here, we have calculated, we have flat, and we have a formula, and we have production, and we have table. So production will be used when we have production based depreciation calculation. So let's take the manufacturing industry. So where we will not basically calculate the depreciation for each asset on a periodical basis. Instead, we will calculate based on the production run that has happened in a given period. Let's say I have 10 machineries. Out of it, I have used 8 machineries for a period of maybe 8 hours per day. And for the other equipments, other two equipments, if you see, so I haven't run the machinery for the first 1 week. So what will happen in this period is that system will calculate depreciation for those 8 assets and system will not calculate depreciation for these two assets since the production is not run for this particular week for whatever the reason maybe the repair and the other things. uh, so this is how the production depreciation method will work. Okay, and then we have something called formula. So we will give a formula. So this is based on the business requirement. Like if we are not able to attach in, I mean achieve our requirement through the flat or the calculated basis, so we can go for the formula where we can write the complex formula and derive the depreciation amount. Okay. So for our case, what we can do is that we can just say flat. So if we say flat, which means we have two things. So one is on the cost, and the other thing is on the net book value. So when I say cost, which means on cost system will take consider the depreciation that we are giving it here in the basic rule, and the other one is on the net book value. Let's say the system has calculated maybe the 10,000 is the cost of the asset, and system has deducted 2,000 as an depreciation this month. So my net book value will become 8,000 now. So system will start calculating depreciation on 8,000, not on the 10,000. Okay. So based on this, we will have different requirement in terms of calculating the depreciation. So accordingly, we can define the depreciation methods. Okay. And then we have something called the depreciation basic rules, like if we wanted to use the recoverable cost, or how do we want to process it basically. Okay. And if we wanted to depreciate in the year end, so that also we can enable this. Okay. And you can see here that life in years and all those things. Since I have chose for flat, which means flat rate, I'm just trying to deduct it. So in this case, what will happen is that I will not have the years and these things. So system will knock off, or system will have a regular rate for each period, and at the end of the period system will calculate, or system will say that current cost of the asset is zero. So from then this asset depreciation will stop generating the depreciation. So this is how the flat rate works. And for the other cases like calculated and these things, if you see, you can give the asset in periods. Let's say you can give it for like 5 years, 6 months. So you can give it. So similarly, okay. Yeah. So then we have the basic rate that we are defining it here. And if you wanted to add the adjusting rate, we can add it. So based on that, system will give us the total rate, or the actual rate how system should deduct the depreciation. Okay. So this is depreciation method. So any doubt?
Okay.
Okay, we'll move on.
Yes.
Okay. The next configuration would be manage asset book. So that is we have, so here we have two things. So when we say asset book, we have something called corporate asset book, and we have something called tax asset book. So what is corporate book and what is tax book? So corporate book is the book actually we will do the transaction. So the tax book is maintained only for the compliance part or the taxation part of it. Okay.
Okay.
So I'll just take the asset that I created, I mean asset book. Yeah. So this is the asset book that I created. So if you see here, it will just take default as an Tata book that I have created here. And if you have, maybe if you are creating the, what do you call, the tax book. So for those cases, maybe it will say Tata tax book, and associated corporate book would be Tata book. Okay. So this is how basically system will differentiate. So the differentiation will happen at asset book class. So since this is corporate book, system is saying corporate. In case of tax, it will say tax book. Okay. So there is a process called transferring asset to the corporate book to tax book. So whatever transaction that we are making it here, so this will be transferred to tax book at end of the period in order to achieve our compliance requirements. Okay.
Okay.
And then we have ledger. So we have the ledger TS ledger. So we have what do you call some validation here. So what is the validation point we have here is that we should have the same asset calendar and GL calendar. In case, let's say we have one for physical and the another one as an normal calendar or the US calendar. For those cases, we will have issue in terms of pushing the accounting entries to the GL. So it is always suggested to have the same format of calendar in the ledger and the books. So this is where basically we are attaching the ledger so that we can transfer our asset accounting entries to the GL module. Okay. So apart from that, we are attaching the depreciation calendar, we are attaching the fiscal calendar and the prorate calendar that we have created. And I have mentioned current period is February 2020 so that we can verify the period closure, depreciation run and all those things. Okay. And if you see here, so we have two options, evenly or by days. So I was saying something that we can run depreciation on days. So if we wanted to run depreciation by days, maybe we should opt for the first option. So in this case, I have opted for second option since I'm calculating the depreciation for each period. So that is for January, February, March. But if you wanted to calculate by days, maybe we will have to change it to by days. Okay. And here you can see that this is last depreciation is 7th of November. Since I have run the depreciation for this particular day, I mean before this I have checked it, so it is running. So so that is why system is saying it is 7th November. Okay, and we can also see the last depreciation run status. Okay. And we have something called depreciate if retired in the first year. So whether we wanted to allow system to depreciate if the particular asset is retired in the first year, so we can enable it here. So if I have disabled this particular option, which means if I procure an asset on the month of January and if I try to retire this particular asset on the same month, let's say I procure on 1st of January and I retire on 15th of January. So what will happen is that if I disable this particular option, so system will not calculate depreciation for this 15 days. So if I enable, system is going to calculate the depreciation based on the prorate convention that we have given, either mid-month or the current month or the following. Okay. And allow amortized changes, which means whether we wanted to have the financial changes to the assets. So we can enable this option. Okay. And then we have allow cost sign changes, which means let's say we bought an asset for 10,000. So now if we wanted to make this asset cost maybe minus 100, so should we allow? So in this case, I have just disabled this option, but it is possible if you wanted to have, maybe we can have. For the rare case, we have it. But for our cases, we are not considering this because always the asset cost will be in positive. Okay. And allow impairment. So impairment is again a kind of an change in the asset. So I'm disabling this option as well. And then we have allow ledger posting. So should I allow ledger posting, which means if I disable this particular option, then I will not be able to what do you call post the entries to the GL. Okay. And then we have allow physical inventory. So physical inventory is nothing but count of asset and all those things. So this is kind of a part of inventory and the asset reconciliation. So I have disabled this option as well. And we have something called allow leased asset. So if I wanted to have a lease asset, so lease asset is something that for a particular period of time I will get it. So we can classify this asset as a leased asset. So this also I have disabled for now. And we have something called use payable invoice date as a date placed in service. So here we have something called mass addition process. So what will happen in this mass addition process is that we will create an invoice in AP module. So after creating the invoice module, I mean invoice in the AP module, we will transfer these assets through the mass addition. So when we are pushing the assets through the mass addition, so should the system be allowed to uh, consider or take this particular invoice date as a date placed in service? So if I enable this option, which means my invoice date will become as a date placed in service. So it depends on the business requirement whether they wanted to have this option, or maybe they will do backdated entries and then maybe they will change the date placed in service later. So that is also possible. So for our case, I have enabled this option. Okay. So allow unallocated payable invoice line. So maybe we can just manually add lines. So for those cases, I have enabled this option as well. And we have suspend automatic merge of payable invoice lines. I don't want to use it automatically. So I wanted to have it manually so that I can say that whether this line should be merged with this particular line, I mean asset. Okay. And then we have invoice net book value threshold for depreciation. If you wanted to have a threshold value for the depreciation of the net book value, so that we can use it. So I'm not using any threshold here. So I'm just leaving as it is. Okay. And then this is related to the threshold. So I'm leaving this as well. And we have something called annual depreciation rounding. So if you wanted to have depreciation rounding, so let's say this is in 12.46. So whether how do we wanted to handle this, with restriction or always? So this I don't want to round it off. I just wanted to see as it is. So I'm just leaving this option as well. And context value is nothing but the DFF, maybe the additional information if you wanted to capture, so that we can enable it here and we can select from the option. Okay. And apart from that, if you see here, so we have a few accounts that needs to be defined here. So this is completely for the retirement of an asset, retirement, or we can say reinstatement. So for these cases, what we can do is that we can define the accounts. So we will have the net book value retained gain or loss, and then we will have the proceeds of sale gain or loss, and then we will have the cost of removal. So this will come under the retirement part. So I'm just giving the accounts. And here if you see, so for the depreciation method and the asset descriptions, all those things, so I have a reference data set. So here I have two things. So one is my own reference data set or the custom reference data set, and I have enterprise. So which means if I say enterprise, so any asset book or any unit can use my particular the asset book that I have defined it here. So the other way is that I have something called TSRDS01, which means only this particular ledger or particular RDS can use this particular configuration that I have made it here. So unless I have access to this particular RDS, I'll not be able to see Tata book. Okay. Any doubt?
No, sir.
Okay. Yeah. So that's all we have it in asset book. So after defining asset book, we will have to create or assign the what do you call the asset categories. So why do we create the asset categories is that this is where we define that this particular categories can be used when I add an asset. Okay. So I'll just take the asset that I create, I mean categories that I created. Yeah. So this is the category that I created. I'll just go edit. Yeah. So this is my category. So how I have defined category is that I have defined HW furniture, and under furniture I have said 2001 code. This is chair, and here you can see that there are three components, that is lease, non-leased, and leasehold improvement. So I don't want to use lease, and I have disabled it at asset book as well. So I'm saying non-lease. And ownership. If it is leased, we will say leased, or we can say owned. And property type. So these are like kind of an additional information, personal or real, or if you want to enable property class, so that we can enable. So capitalized. So capitalized is nothing but we are owning this particular asset. If I say leased, which means this is not owned by me, whereas I can say partially owned by me. Okay. Since this is ownership says that is owned, so I can say this is capitalized, and I have enabled this category so that I can use this particular category for my asset addition and the other things. And if you see here in the header information, so I have given only the categories, but system will not understand which book it should be used. So here I am defining the book basically. So I have attached this for the book called Tata book, so that we created in the earlier setup. Okay. And under Tata book, we will need two components of configuration, that is accounts and the default rules. So default rules is nothing but our depreciation and the other methods. Okay. So here, what I have done is that I have chose asset cost, asset clearing, depreciation. So this is where basically system will pick when I add an asset. So when I add an asset, which means system will take the asset cost as a depreciation expense. So from where it will pick is that from this particular component called asset cost and depreciation expenses. Okay. So similarly, I have the other accounts as well attached to it. So this is just to understand that from where a system is picking the expenses. And then here if you see, so we have again this is an DFF additional information. So I have disabled this option, so that's why I'm not seeing any inputs here. And here you can see that I have enabled depreciate. So if I disable this depreciate, which means for this category, system will not calculate any sort of depreciation. Okay.
Okay.
And then I have something called depreciation method. So already I have created one depreciation method, that is 150 dB. So this is straight line method. So this will be used for 5 years. So exactly 5 years. So I have mentioned life in month as 0. So we can see that prorate convention, so that we created in the initial configuration. So I'm using prorate convention, and for the retirement convention as well, I'm using the Tata Pro C, so that we created in the earlier setup. So apart from that, we will have the salvage value and the threshold limit and these things. So I'm not using this part. And apart from that, we have group assets. So this also I have disabled it. So if you see here, so if I wanted to use the group asset, I'll have to create one and I'll see it here. And based on that, I'll say the gain or loss and the other things. So that's it on the categories. So any doubt?
Okay.
Okay. So So I have created categories as well. So the final configuration for us would be on the what do you call the data access set. Okay, so we have created our configuration, but in order to use the particular asset book that we created, so what we need is that we need access for this particular book. So here we have two things. So if I wanted to use the asset that I created, or if I want to create an asset under the asset book, so I will have to assign two roles to the particular user. So one is asset accountant and the other one is asset accounting manager. Okay, so these are the two roles that I will need. And after assigning the roles to the user, so what I will do is that I will give access to the asset book that I wanted to give. So I will
Okay.
say I have already given access to this particular user. Okay, so maybe I'll take different user. Okay, so I have asset accountant and I say asset book. So under asset book, I say it is Tata. Similarly, I will give for the other one as well. Okay. So these are the setups that we will need. So we have given access as well. So now we will be able to see the asset book under our what do you call the dashboard that we had. So always it is suggested to log out and log in when we have assigned it. Since I have already assigned it, so I'm not logging out. I'm just directly navigating to the screen. Okay, so here we have two things. So initially we will see what is inside this asset and then we will try to understand the asset inquiry.
Okay.
Okay, so we have add assets. I will just click add asset. And here we can see that whether the asset is CAP, whether it is expensed or capitalized. So what is the difference between these three asset types? So CAP is nothing but it is in progress. So which means this particular configuration, which means this particular asset that I'm creating will be in progress and it will not calculate depreciation, but this will stay as only as a master asset master, but whereas it will not contain any sort of transaction. Only thing we will do is that we will add the cost of the particular asset inside this every month or whenever we receive the cost. And we have, okay, so after we complete this CIP, so what we will do is that we will capitalize the CIP asset. Okay, so this will be cycle for CIP, and then we have something called capitalized. So what is capitalized? So capitalized is something that I procure on a particular date, or maybe I raise purchase order and I create an invoice and I import it into FA module, and I have capitalized this particular asset, and I said that this will be a capital asset. And we have something called expensed asset type. So which means this is not a capital asset, but whereas this will be considered as an expensed asset. So I'll just opt for capitalized asset. And we have a category. So inside this category, so we have enabled only one category. So that is HW furniture. So under furniture, what we have given is that we have enabled this particular option, chair, 2001. If you remember, we gave 2001. So I'm giving chair and description. I can just enter that. Maybe the asset depreciation I can say chair, chair for HQ. And I would say this is costed around 30,000 and 2. Okay, and if you see here, so system is defaulting the expense account. So if you check this expense account, so it is depreciation furniture, office equipment, sorry. I attach the office equipment, not the furniture. So from where this is populating is from the asset categories that we defined. So that is why after we select the categories here, system has populated automatically the expense account. And then we have this one, location. So I have created one location for China. So I will use the same China as an example. So that is Beijing. Yeah. So I'll just say next, and what I will do is that I'll just add the asset key and the other mandatory informations. Okay. So apart from that, if you see here, so system has taken in service date. So this is the actual date placed in service. So which means system has taken last date of the current month. So current month is February. So that is the latest open period you can see here. So that is February 20. And I'm just taking the date as it is. I'm not changing it here. And we can see the categories and the other things defaulted from our earlier inputs. Okay.
Okay.
So here we can see that there are two columns open. So that is employee name and employee name we have it. So I'll just say this particular user. So which means this two units will be handled by this employee under this location called China Beijing. Okay. So this is our overall asset addition part. Maybe if we want to split it into two, we can just say one unit and we can give it to the another employee as well if you wanted to track it.
Okay.
Yeah. So I'll just give it and I will submit this asset. we have it here. So the asset number is 12, I think. Yeah, so this is the asset that we created. So if you see here, so we can see the overall details and the cost and all those things of the asset. So we have the category and then we have the cost. So the cost that we gave is 30,000. So that will default to the recoverable cost. And we can see that net book value is 30,000 since we didn't run any depreciation for this asset. Okay. And then here we can see at a high level that the depreciation flag is enabled, and we can see that if the adjustments are made, we will see the current cost, and this will be the original cost. So original cost will not change, but whereas the current cost will change based on the adjustments and the depreciation that we make to the asset. Okay. And depreciable basis will be always on the amount that we specify. So these are the basic information. And if we are importing through maybe AP module, so we will have the sources as well. So in this case, since we haven't entered any invoices against this asset, so system is not showing any inputs here. So it will be always blank. So maybe if we have any input, system will give us the purchase order number, the other details of it. Okay. And we didn't use any additional information. So it is just says that this is a new asset that is bought recently. And we have assignment. So assignment is nothing but who's managing this asset. So if you see that, so here we will have the distribution identifier and we will have the quantities managed by this particular employee.
Okay.
And we can see this is the location. Okay. And we can see the cost adjustment of this asset. So we haven't made any cost adjustment. So our cost and the original cost remains same. So if we have made any adjustment to the cost, so we can see it here in this particular history page. And then we have the depreciation. So we don't have any depreciation or we don't have any transaction that is associated with this asset. So we will just try to run the depreciation and we will see like how it is reflecting. So we should be able to see the depreciation in this particular column after we run the depreciation. Okay. So I'll just run for this period. So this is one point that we cannot run depreciation for specific asset. So it will run for the entire book. Okay, so maybe let's say one asset has processed already for the depreciation. So system is going to show the same depreciation. It is not going to double it. Okay, I think the depreciation run is complete. I'll take the same asset, that is asset number 12, and we can verify the depreciation part. Yeah. So here we can see that depreciation is calculated, and you can see this is 750. and we should be able to see the same in depreciation page as well. Yeah. So we have the total amount for this particular period. So that is total is 750 since we have only one period. And we will see the depreciation amount, and if you have the adjustment for the depreciation, so that will be shown up here. So we are not using any bonus depreciation and the other things. So what we can do is that we can create accounting and we can check the accounting part of it. So after accounting, we can just check directly from view accounting. So now if we check, so we will not be able to see any accounting. So I'll just go directly and account this transaction. So for this, I'll navigate here. So that is create accounting. So under create accounting, I would say the book is starter, and process category I will leave as it is because I wanted to what do you call it, account for both addition and depreciation. So I'll leave it as it is so that system will pick all kind of transactions that is available or unprocessed transaction. And end date I would say the same date, 29 February. And I will say this is an final. So final is the one it will be processed to GL. And I'll say this is an detailed report and transfer and post to GL. Okay, the program is completed. So we'll wait for the execution and
Let's start.
yeah. So the program is done. Okay. So this is
It's not clear though.
just give me a minute. Hello. Hello. Can you hear me?
Yes, sir.
Yeah. Fine. So here, if you see, there are two transactions that we did. So one is on the addition part, and the other is on the depreciation part. So we can see that this is our transaction. So that is for the addition. So addition, we can see that cost to clearing. So which means asset cost to asset clearing. So this will be the normal transaction for our this thing. What do you call the asset addition? And subsequently, after we run the depreciation, system will generate another accounting entry, or after we run the accounting entry, so we will have another one coming in. So that will be on the depreciation to the accumulated depreciation. So if you see here, so this is our depreciation, so 750.
Mm.
Yeah. So this will be our entry. Maybe we will navigate to the application, and we will check from there for a particular asset. So our asset number is 12.
Yes.
Yeah, so this is our asset. So we'll navigate to depreciation and view accounting. Yeah, so here we can see, so this is from depreciation to accumulated depreciation. Yeah, so this would be our accounting entry for depreciation. So now what we can do is that we will try to close this particular period, and we will see like how to retire an asset. So I'll just say, so I'll click on the depreciation, and from here I can say either calculate depreciation only, or I can say calculate depreciation and close period. So in this case I will say close period as well. So I'll just check the program if it is complete.
Hello.
Yeah. So we have processed the depreciation. So if you see here, so this is the latest open period for the depreciation. And if you note down here, so I'll not be able to go back to the April period. So I whatever I wanted to do, I can do only on the March period. So always we should be a bit cautious in terms of reconciliation with GL and the other modules. So let's say GL is open, but they wanted to close the FA module. So there we wanted to close or freeze all the FA related transaction for the February month. So unless we close this, we cannot close the period, because once you have closed it, we cannot reopen this period. So we have ran a depreciation for two periods. So one is for the February, and now we have run for the March as well. So let's go back to the asset inquiry and verify the accumulated depreciation. Yeah. We can see that the depreciation is calculated for 2 months. So one is February and the other one is March. Okay. So for February we will not have accounting, and for March we will not have accounting. So we'll just see the financial impact of this. So here we can see that YTD is 1500, and we have depreciation reserve, that is total depreciation for this particular asset. So we have two things. So one is YTD is nothing but for a year. For yearly depreciation, it is 1500, since we have ran only for two periods. So let's say we have 12 periods, so which means this will give one value, and depreciation reserve is something as a whole. Okay. So that's the difference. So this will be the depreciation, and we can see the net book value. So now if you see the net book value, we will still see the 28 900 instead of having 30,000. Okay. So this is on the depreciation part. Any doubt in this?
No, sir.
Okay. Okay. So we will move to the cost adjustment. So we can see that the asset original cost is 30,000 and the current cost as well 30,000. So what we will do is that we will try to uh, do the adjustment on the cost. Okay, before that, what I'll do is that I'll complete this one, asset transfer. So we have two quantities. So what I will do is that I will transfer one quantity to the different resource. So I'll just say this is transferred to TrainT, and I'll change it to 1. And here I will say 1 to employee TrainT. I'll use the same account, so I'm not changing the account code combination. So I can even change the accounts. I mean, transfer from one account to different account. But in this scenario, I'm not changing the accounts. Instead, I'm just transferring the units from one unit to another unit.
Okay.
Okay. So I have just said that new unit will be 1 1, which means I'm just transferring. So that's it. So I'll just click submit. Yeah. So here we can see that. So the one quantity has been transferred to TrainT. So which means one will be managed by employee one, so that is Arun, and the another one will be maintained by TrainT. Okay, so we will do accounting for this and we will verify the accounting entries. So we can see there are two entries. So one is for the periodic depreciation and the other one is for the transfer. So periodic depreciation is the one we did for the March period, so that we didn't process it since we haven't selected or filtered by transfer. So system has taken for both periodic depreciation and transfer. So here we can see that the C1 class is periodic depreciation, and let's leave this since we have already seen this. So here we can see that so this is for the transfer. So this is the transaction number that we have used. So if you see here, so we can see that the asset cost will reflect, and we will have the accumulated depreciation, and again we will have another part to it since we have this one, what do you call, the other office, since we are transferring from we have taken one unit from Arun and we have transferred it to TrainT. Okay, so this will be the overall offset accounts that system will be using. So if you take as a whole, which means here we have 750. So that is for accumulated depreciation of one particular employee to the another particular employee. And here if you see the cost of 15,000. So that is being splitted out now. So which means you can see that employee 1 and employee 2, which will be 1515, and it will be offsetted with 30,000. Okay. Any doubt?
No, sir.
Okay. Okay, we have seen transfer of asset, and okay, we will see adjust assets. Yeah, so first I'll show you like how to change the financial information like asset cost and the other details. And in this case, we will try to change the value from 30,000 to maybe we will say 28,000, and we will see that how system is taking or considering this as a whole. So I have changed it to 28,000, and now let's try to check this change in the books. Yeah, here if you see, so this is our original date and placed. So that is on the period of February. On the February month, we had the cost of 30,000, and now we will have the cost of 28,000. Okay, so we can see the original cost and the cost that is being updated.
Okay.
Okay, so now we can see in the financial information that always the original cost will be same, but as I said, always the current cost will be changed based on the adjustment that we make. Okay, so based on that, if you see here, so the net book value and the YTD depreciation and the depreciation for each and everything has changed. So system will consider all these activities as an adjustment, and system will process it from the backend automatically. Okay. Okay. So this is overall history that we can see. So initially we added the asset, so that is first activity, and we assigned this particular asset to an employee called Arun. So that is our second activity. And we transferred an asset from Arun to TrainT. So that is our second, third activity. And now what we did is that we did the cost adjustment to the asset. Okay. So we will try to account this transaction, and we'll try to check the entries. Yeah. So here we can see that even classes adjustment. So as I said, system will consider all this adjustment as a single category called adjustment. So this is kind of an SLA term, and we can see here this is an cost adjusted against this particular account. So since we have the depreciation account and all those things have impact, so system has recalculated based on those impact. So we can see that cost clearing, cost to cost clearing, and then we can see that depreciation expense and the accumulated depreciation. So that is 50 rupees should be shared between two employees. Okay, so this will be our net entry, that is 2050. So now if we check the accounting entry, we should be able to see this impact in our transaction as well. Okay, I'll do one thing. I'll just run the accounting for, run depreciation, and I'll do the create accounting. Yeah, so we can see here, so this is our depreciation. So this is our normal entry. So that is the depreciation expense and accumulated depreciation.
Mm.
So now we can navigate back to the application and we can check the cash up depreciations, how system has calculated. Yeah. So here we can see that system has the adjustment of 50 rupees. So the reason for that is that we have changed the asset cost. So asset cost will do the catch up. So that is why we have the depreciation adjustments. Okay. So the total would be 650, but whereas the actual depreciation that was happened was for 700. Okay. So that's all about the cost adjustment. So any doubt or we can move. Okay.
You can move, sir.
Yeah. Yeah. Okay, so we have two kind of adjustments here. So one is that changing the financial information like asset cost and the other details. And the other one that we have is that change the category. So this is kind of a non-financial impact. So which means we are changing from one category to another category. Okay, it is nothing but just we will add new category and we will see it in there in the asset screen. So this is simple, but we should be aware that there is an option to change the category. Okay. So then we have the retirement. So we will see like how basically the asset is calculating depreciation and the other things while the asset is getting retired. Okay, so we will see two things. So one is retirement and reinstatement. So the retirement is nothing but retiring the asset in mid of the period or maybe after we consume all the asset cost. Maybe if we wanted to retire, we can retire. So in this case, what I will do is that I will take the asset and what I will do is that I will retire unit by unit. I'll not retire by cost. So I'll say maybe I'll retire one unit. I'll keep one unit and I'll retire one unit. Okay, so I'll retire the asset of maybe 20. Okay, yeah. So and apart from that, so we have something called proceed of sale and cost of removal and the other things. Like this is kind of a financial information. So if we are consuming any cost in terms of selling this particular item, so those things we can mention it here, like proceed of sale and the other things. So based on this system will calculate whether this is a gain or loss for us. And here we can say that this is kind of an additional information. just for the display purpose. We can say that this is sold to so and so vendor, vendor or the customer. Okay, so we can see here. So the cost retired would be 14,000. So our initial original cost is 30,000. So on 30,000, we actually did an cost adjustment of 2,000. So which means our current cost of the book or the asset would be only 28,000. So out of 28,000, since we are retiring only one quantity or the one unit, system will retire only 14,000, but whereas the entire asset will remain same or it will retire partially. Okay. So I have entered the details. So I'll just say retirement retain maybe sales. So I'm selling this and I'll say submit. Yeah. So what I'll do is that I'll navigate and I'll do the accounting.
Hello.
Yeah. So yeah.
Class seven.
So this is done.
Mm, that was that. Mm, Open that. Mm, that.
Yeah. So if you see here, so since we don't have any proceed for sale and the cost of removal impact coming in, so the accounting entry will start from here. So basically, we will have the accumulated depreciation and the net book value retired in top. I mean, in the debit column. So that will be like around we will see 14,000 because we retired only for 14,000. So our net book value will be 13,650 and accumulated depreciation would be 350. So the reason why we are seeing 350 as an depreciation, but whereas our depreciation should be 700. So the reason for that is that the prorate convention that we defined. So our convention says to the system that this will be calculated half on the mid of the period. Okay. So that is the understanding. So that's why we are seeing this cost and the accumulated depreciation for this. So we can see that entries like cost will be credited, and we will see the accumulated depreciation and net book value on 13650. Yeah, fine. Any doubt? Okay, I'll move on.
Yes.
Okay, now we have written an asset in one quantity. So let's say I have did this by mistake. So now if I wanted to reinstate, maybe I don't wanted to do it for this asset, but maybe for the asset B, but by mistake I have done this for this asset. So what I will do is that I'll do reinstatement. So for that I'll click reinstate asset. So I'll give the asset number and I'll say reinstate.
Mm.
Yeah, system. Yeah. So we can see that this is reinstated. So which means whatever the debit column that we were seeing, so that will be in credit. So you can see that cost was on the credit side, but whereas now it is in the debit. So similarly, like the accumulated depreciation and the net book value. So now if we check in the application, I mean in the asset page, so we should be able to see two units. So I'll just navigate and check if the two units are available. Yeah, we can see that we have two units. So one for TrainT and the other one is for uh, so we can see the overall transaction. So these are all the transactions that we did. So we can see this is reinstatement and transfer out. This is part of it. And we have the partial retirement. So we didn't do the complete retirement. So instead we retired only one quantity. Okay. And then we did the cost adjustment and others are like addition and transfer these things. And if we want to see the reinstatement accounting entries, maybe we can see it from here as well. It is cost to net book value and accumulated depreciation. Okay, and this is our recent transaction with regards to this particular entry. And we can see the recent additions. Like we didn't add anything for the month of March, so it will be always zero. And transaction, if we want to see a specific transaction, like we saw in the asset page, there are multiple transactions. Let's say we wanted to check only the reinstatement process. So what we can do is that we can check in the transaction. We can give the transaction number of the book, and we can see details of it. We'll see the current cost, and we will see the retired this thing, and we will see the gain or loss amount, all those things. If you see here, so since we didn't give the proceed of sale and cost of removal, so this will be zero. Okay, and we can see this is an sale. So the net book value would be 13,650. So this is a loss for us. So that is what the understanding from this particular transaction. So similarly, we can take for any kind of transaction for this asset. Fine. So what else we have? Yeah, and apart from that, everything is similar to us. So only thing that will be different is that using the spreadsheet. So then that is the only option that is there. So apart from that, do you want to see anything in fixed asset? So I believe we covered almost all the points.
Yes,
Maybe
sir.
you have any doubt or anything that we can clarify. Yeah, yes. Durai, Shrikant, any doubt?
Sir, what is could you please repeat again reinstatement?
Yeah, reinstatement is nothing but reversing the retirement. So what is retirement? So retirement can happen at two stages. So either I consume all the or the entire cost of the asset and I retire. So this will be one scenario. And the another scenario would be what I will do is that I'll say maybe I don't want to take it for a longer run and
Okay.
I wanted to sell out in mid of the month or mid of the period. Let's say I decided to use for 5 years
Okay.
and maybe on the second year I wanted to sell out because the market value might be decreasing going forward. So I wanted to sell on the second year. So what I will do is that I'll retire on the second year, and I'll have the depreciation and all those things calculated. So based on that, I can check my profit or loss. So this is retirement. Okay.
Okay.
So there is a condition, there might be a scenario where we might have retired an asset that is different, should have been retired. So let's say I have two assets, asset A and asset B. In this case, I should have retired only asset A, but I should have not retired at asset B. So by mistake, I have retired it. So what I will do is that I will reinstate it, which means whatever the retirement that has happened, that can be reinstated or reversed. So this is
Okay.
what we say reinstatement.
Okay. Okay.
Yeah. Anything else?
Thank you. No, sir.
Okay, Srikanth, anything? Or you can tell me like in Asad, if you have any other doubts also, you can tell me. Or maybe if
Okay.
you
Okay.
can ping me in group also, that should be fine. I can clear your this thing.
Okay.
So
Sure.
these are the things that we have in Asad. Maybe you can work on. So maybe after you start working, you will have here and there clarifications. So you
Yes.
can
Yes. Sure.
ping me anytime. Yeah.
Sure. Sure.
Yeah. So yeah. So if you don't have anything, maybe we can wind up this call.
Okay, sir.
Yeah, fine.
Okay. Bye.
Yeah, thank you. Thank you, Durai. Thank you,
Thank you.
Srikanth, for
Thank
joining.
you.
Thanks.